Hey guys, what's up? This is Akanksha and welcome back to my YouTube channel. In my previous video, I had talked about what is mutual fund and how it works. If you haven't watched the video yet, then I'll put the link in the description box below as well as here so you can check that out. And in this video, I am going to talk about what are the advantages of mutual fund, the disadvantages of mutual fund, and things to keep in mind before investing in any mutual fund. So let's jump straight into the video. Let's start with the advantages of investing in mutual funds in India. There are so many advantages of investing in mutual funds. The first one is convenience. When you invest in a mutual fund, then you get to own different companies' stock in one package. You only buy one package and you could have hundreds of different stocks in it. Also, mutual funds help you save a lot of commission. For example, you want to buy 50 different shares, then you have to pay commission to 50 different companies. And it will take you much more time to buy shares from 50 different companies. But when you invest in a mutual fund, then you get the ownership of 100 of different companies in just one click. It also eliminates the price fluctuation throughout the day as they are traded only once per day at a closing NAV, that is net asset value. The second advantage is diversified portfolio. Diversification means spreading your eggs in different baskets. When you buy one mutual fund, that means your money is distributed in different companies' stock and asset classes, and so it diversifies your portfolio. So the more diversified portfolio you have, the lower the investing risk is going to be. For example, if one asset class fails to perform up to the expectation, then the other asset classes would make up for the losses. Or if one of the stocks in mutual fund crashes, then you still have other stocks in different baskets. That means different companies to maintain your portfolio well. It is quite helpful in managing the volatility of the market and provides some stability. The third advantage is professional management. It's possible that you may not have much knowledge or information on how and where to invest, but the fund manager knows what they are doing and they keep a watch on timely exit and entry and takes care of all the challenges. So you only need to invest and the rest will be taken care of by the experts who excel in this field. When you buy a mutual fund, then you pay a management fee as a part of your expense ratio, which is used to hire professional fund managers. And these fund managers are backed by a team of analysts and experts who pick the best performing stocks and assets so that you can get excellent returns. The next advantage of mutual fund is liquidity. Most mutual funds come with no lock-in period. It provides investors with a high degree of liquidity. That means you can redeem the units at any point in time, unlike fixed deposits. Mutual funds have flexible withdrawal, but there are factors like the pre-exit penalty and exit load, which you should consider beforehand. The next advantage is flexibility to invest in smaller amounts. The most important benefit of mutual fund is its flexible nature. You don't need to put a huge amount of money to invest in a mutual fund. It can be as per the cash flow position. You can choose systematic investment plan, that is SIP, which can be monthly, quarterly, yearly, or as per your convenience. The next advantage is accessibility. Mutual funds are easy to buy and you can start investing in mutual funds from anywhere in the world. The mutual funds are distributed through channels like brokerage firms, asset management companies, online mutual fund investment platforms, agents, and banks. There are so many advantages that mutual fund provides, but there are certain disadvantages as well. So let's see what are the disadvantages of mutual fund. First is cost to manage the mutual fund scheme. As I mentioned earlier, the fund manager manages and operates the mutual fund. This requires a lot of efficiencies, expertise, and experience in the specific field. Since someone else is doing your job of picking the great stocks, so they are going to charge some money for that. It could be 1 to 3% of your capital and it's called expense ratio. These charges reduces the overall investment returns. For example, you have invested 50,000 in a mutual fund and the expense ratio of that particular mutual fund is 2%. Then nearly 1,000 goes directly to the fund manager. And even if the mutual fund does not perform well, then also you get charged 2%. And the majority of mutual fund does not worth that much fee. The next disadvantage is dilution. Diversification saves an investors from major losses, but it also restricts you from making a higher profit. That means your profit is getting diluted. The next disadvantage is lock-in periods. Few mutual funds like equity-linked savings scheme have longer lock-in period of 3 years or more. So the investor cannot withdraw the investment before the lock-in period is over. And even if they are withdrawing these funds before the lock-in period, it could lead to huge penalties. So these were the advantages and disadvantages of mutual fund. Now let's see what are the things to keep in mind before investing in any mutual fund. The first thing you should check is asset under management, that is AUM. It is the total market value of investment that a fund manager is managing on behalf of you. If AUM of any equity fund is higher, then its capability of giving returns is lower than average. For some investors, larger AUM serves as a function of trust, but it does not work same as debt funds. The second thing to check is the investment strategy. You must check if the mutual fund investment is growth option or dividend payout option. As I mentioned in my earlier videos that I prefer growth option for long-term investment because it can help you build the wealth with the power of compounding rather than taking out the interest at the end of each year. The next thing to check is the type of plan. Check if the mutual fund is a direct plan or a regular plan. Few distribution companies only sell regular plan, and for regular plans you have to pay the higher commission. So look for direct plans. Direct plan means that you are buying the mutual fund directly from the asset management company, that is AMC. So you don't have to pay the additional commission to the distributor or the mediator. The expense ratio of direct plan is less than regular plan. So direct plan gives you better returns than regular plans. The next thing to check is CAGR, that is compound annual growth rate. Normally, a mutual fund agent would tell you that this mutual fund will give you 8 to 10% returns annually. That does not mean that you will get 10% return at the end of each year. That means your annualized return at end of maturity period would be 10%. The next thing to check is the exit load. It is the fee that you need to pay if you redeem your fund before the maturity period. Entry load is generally going to be 0. Exit load is 0 for majority of the funds, but in few mutual funds, there is exit load, which you should check before entering. The next and most important thing to check is expense ratio. Expense ratio is how much the fund manager will charge you for managing your account. It can be as low as 0.1% or up to 3%. So the lower the expense ratio is, the better returns you are going to get. Another important factor is fund manager. It is better to read about the fund manager's history because he is after all going to manage your hard-earned money. The next factor is fund holding. It would show you where and in which companies or sectors your funds are invested in. If you are closer to your retirement, then lower risk options are better for you. But if you are willing to take higher risk, then you can invest in higher risk options like stock market and equity based mutual funds. So that was my video, guys. I really hope you find this video helpful, and if you do, then please give it a big thumbs up and also subscribe to my YouTube channel. And I'll see you guys in my next video. Until then, stay safe. Bye bye.